So Airbnb just reported Q3 results and they essentially beat everybody's expectations. They beat my expectations, which were pretty high already. They beat analyst expectations by a lot. Look at that EPS number. They had a record quarter all around, and what does the stock do? It tanks 8%. So what happened? Why is Airbnb dropping like a rock? Today I want to go over the results and then I'll tell you guys why the stock is dropping. So stick with me and let's get started. First thing I want to do is go over the financials. I know this is the boring part, but stay with me. We're going to go through it really fast. So revenues just grew 29%. If you discount the FX impact, then that'll be 36%. And that's an incredible revenue growth. If you actually do a trailing 12 months, you're going to notice that the revenue is more like 50%. They beat the revenue expectations. Now look at that net income. Net income of $1.2 billion. Even I thought in the best case scenario they could drop maybe like 1.16, and that's what I had in my estimates, but 1.2 something? Oh my god, that's disgusting. That is a 42% growth year over year and a 61% growth if you don't count the FX impact. Because do remember the dollar's gone up and the euro's gone down, everything else has gone down, so I'm the report in dollars, so they're gonna have a foreign exchange impact. But if they do that classic double beat and that EPS beat was monstrous, then why is the stock falling? Well, let's go to the next one. After reading the whole earnings report, these are some of the key metrics that I thought were worth sharing. So number one, the long-term stays actually went up to 20% from 19. Do you guys remember everybody just talking like, hey, everybody's gonna go back to the office? Well, not happening, not happening. So international travel is back, and we can see that it went from 43% to 58%. That explains why everybody in the US is complaining, no, I don't have no bookings, I don't have no bookings. Well, people are traveling to Europe. They're traveling abroad more than they're traveling internally. And also we see a continued trend towards the cities, which is back to the mean in terms of trends and whatnot. So this is what people are pointing to for why the stock is down. Let me break it down real quick. I'm just going to expose a couple clowns here who just, they just don't know what they're talking about. Pretty much what everybody's talking about is this right here. Their projections for revenue for the fourth quarter. All these amateurs, they don't know that Q3, because of travel season and summer travel, it's always going to be stronger than the fourth quarter. They think the business actually dropping. Guys, revenue always drops from Q3 to Q4. This is not an Airbnb thing. This is a hotel thing. People just don't travel as much in winter. Now we can see that they're guiding for about a 20% revenue growth in terms of fourth quarter. And without any FX headwinds, that will be more than like 25%. They're also seeing promising trends in cross-border, meaning international travel, and a strong backlog of future bookings. Also in the earnings call, Brian Chesky said that they're going to have incredible demand for next year. Notice all of this is without China reopening. Once the outbound travel from China starts, it's going to be mayhem. And notice they haven't even relaunched experiences. So as of this results, Airbnb is actually trading at an absolutely absurd PE of 40. They're trading now at a price to free cash flow below 20. To give you guys some point of comparison, let's do Chipotle. Chipotle is actually trading at a PE of 52. They're growing at about 1/3 of the rate of Airbnb. Their price to free cash flow is 46. Amazon trading at a 95 PE, and they have no cash flow at the moment because they're reinvesting. And last but not least, Uber, which reported today in the morning, and they're actually up 10% today. Lost money in the quarter. But hey, down 8% Airbnb. So I did a little bit of math to some of these illiterates in Twitter. I think a 2 PEG ratio is pretty good for Airbnb because they have 85% gross margins, software as a service growing really fast. So on a 2 PEG and a 47 EPS growth, you have a fair multiple of 94. And then you multiply by the EPS and you get a fair price of $228 per share. Now you could argue that this multiple is perhaps a little bit too high for Airbnb. Maybe you do a 1. That's a PE of 47, which will be a 20% increase from PE of 40. Now let's do a final recap of the quarter. Record revenues, check. Record net profits, check. Very high free cash flow, check. Record margins, check. Q4 and next year outlook, very good, so check. And this is something nobody's talking about, and I broke this down in another video if you want to see it. It's the first video I put in the channel actually. It's the S&P 500 inclusion and how Airbnb is now eligible. So this is a catalyst that nobody's talking about. Check. Now if you found value in this video, please consider subscribing. This is in no way financial advice. Do your own research. I'm just some dude in the internet. And until next time.